Good morning. Hi. Hello, everybody. Welcome to the first Money Sense webinar for 2025. I can't believe it's May and we've finally off to a start with the Money Sense webinars. This one is sponsored by ABSA. Thank you so much to ABSA for making this possible. I'm Neesa Moodley, business editor of Business Maverick at Daily Maverick. And my guest today, I'm really pleased to introduce to you Lindsey Schutters, who is a new addition to the Business Maverick team. Lindsey is our secret weapon when it comes to the world of crypto. And today he's going to be chatting with me and with you about whether to crypto or not to crypto. Welcome, Lindsey.
Thanks for having me, Neesa.
Pleasure. So part of the reason for the webinar is to introduce you to our viewers and to also let everybody know that you're running a newsletter of your own, the Crypto Corner, which is going out every week on a Thursday. It's got a little bit for everybody from your beginner investor to somebody who already has crypto investments and wants to know more. This webinar, though, we've set up more as an introductory session to talk about the value of crypto in your investment portfolio and how does that work. I want to start by saying, I think if you'd asked me 5 years ago, I would have said crypto, no way, I'm not going to touch with a barge pole. The fact that I've got you on my team means I'm coming around slowly. So let's start with that. How do you address the fact that a lot of people still see crypto as a very dodgy potential asset?
We're actually in a great time for crypto right now because it's performing differently than it ever has. So last week we had this big kind of decoupling from the stock market. So crypto has always been very interwoven with the path of tech stocks because it was always considered like the same thing. But there we had like a big tech stock drop because of a lot of decisions that were made by the White House. And like international markets and tariff wars and all those things. And then Bitcoin actually went up while everything else was dropping that it used to be related to. So this has now moved it. Like, even if you had to ask me last week, this time, how would I define like Bitcoin? I would say it's a commodity. But now it's looking like a different kind of animal. So, like, first off, smart investors spread their money across different things. So you should be diversified in your portfolio. You should have things that are decoupled from other things so that when part of your portfolio crashes, you don't lose all your wealth that time. So you want investments that might go up and some, like when stocks go down or like whatever, you need to spread things around. So Bitcoin is now fully establishing itself as a completely unique asset unto itself, with some underlying things that we'll get into in this webinar.
Okay, and then would you say, would I be correct if I said, ideally, if you're investing in Bitcoin or you're bringing it into your investment portfolio, it should be in the capacity of a discretionary investment. So this is money that, it's not your retirement savings, for example. So you have your core investment portfolio with your standard assets, and your Bitcoin investment would be discretionary on the side.
Yeah, definitely. I mean, the same way that you would invest in like gold, or something like that, or in liquid currency. I put it definitely in that category of investment.
Okay, and then let's talk about how would I go about investing in Bitcoin or crypto? Like, where do I even start?
You start with understanding. So, like, I'm going to use Bitcoin a lot because it's the most mature crypto, and it has the best kind of hedge against whatever market forces are happening because it has kind of inherent value. So why I said I would have described it as a commodity, but not so much anymore, is because it is made from commodity. So you are trading off energy to create the Bitcoin that exists. So at the base level, like you can think about it as digital cash that doesn't exist in a single bank account. It's kind of spread out across many different like ledgers across the internet. So everyone who has a Bitcoin wallet is connected to that ledger. Your Bitcoin that reflects in your wallet is your ownership of the actual underlying blockchain. And as that changes hands, that's how different blocks are added to the chain through those transactions. And then there's a mining layer. So these are powerful computers around the world that work to verify these transactions as Bitcoin changes hands and then add them to the public ledger. And that's called mining, and there will only ever be 21 million Bitcoin ever. Like that is a hard cap. So it has built-in scarcity, unlike other currencies that can be printed. And then the system automatically adjusts to make sure that Bitcoins are created, because every time a new block is added to the chain, those miners get rewarded with a fraction of Bitcoin. And every couple of years, every 4 years or so, it gets halved. That value that they get is halved. So that's the great halving. We had one last year. So now you'll see it gets twice as hard to mine new Bitcoin, and you're getting half as much as you used to. So the energy input and the compute power input keeps going up, and that value then floats the rest of it. I won't go into like kind of pricing points and those sorts of things, because that's a lot of speculation. I have my own beliefs around that. I have critics in the crypto community that say that I'm crazy for thinking these things. But that's besides the point. So like when you have that fundamental understanding, then you can start to appreciate the currency for whatever value it may have that you can find in it. But it's a lot more than like a lot of just speculation and stuff. There's actual work happening every single day, every 10 minutes or so, to add new blocks to the chain that is giving this thing value.
I have to admit, I think some of my comments are going to come across as skeptic. And I know you said you're not going to touch on price, and I appreciate that. But I did a little bit of research last night, and I distinctly remember driving in the car from Cape Town to the West Coast and listening to them talk on the radio in 2015 about Bitcoin and thinking, oh, okay, that sounds interesting. I wonder if I should, it's probably too late. The cost at that time was 2,500 to 3,500 per Bitcoin. It's a hell of a lot more now. So I'm assuming if I wanted to invest in Bitcoin now, it wouldn't be a case of, okay, I've got, I'm going to buy 10 Bitcoin. There's fractional ownership that's available, right?
Yes. So that's the only route to ownership right now, unless your name is Michael Saylor and you have a company called MicroStrategy, which is just buying up as much Bitcoin as they can, and they're just going to hold that kind of asset and then sell other financial vehicles around that, like ETFs, like exchange traded funds. There was a Bitcoin like retirement scheme that's also being built now in the US, where it's basically just retirement funds that is linked to the Bitcoin price appreciation. What you would have seen on the weekend, actually, if you do watch the price, is it fell off because a lot of guys were just taking off their cream, as we like to call it, or at least realizing their profits from buying in the price rally of last week. And just ahead of the US Federal Bank, they're looking at the interest rates and those things now this week.
Yes.
So there's a lot of tension around that. People are trying to just pull out cash from Bitcoin. So that contributed a lot to the price drop that was over the weekend. But I see it's on a rally again now. And if we're going to speculate on price, it's going to probably exist above like the $50,000 threshold going forward, just because the energy cost to create it is so much. And just like any other currency, I mean, I don't like to talk about it as a currency because that's not how I see it as an investment vehicle. Just a disclaimer again, I don't hold any crypto assets because I am a journalist who reports on the market and I interview and report on different businesses that was built on top of crypto. So that would be a little bit of insider trading that I would have to disclose every single time. So I just, for ethical reasons, I don't do that. But yeah,
Okay.
so yeah, it's always fluctuating. It's always moving. Yeah.
And then in terms of like the nitty-gritty of getting to the investments, I see we've already got a query from somebody. We are going to touch on how your crypto gets taxed, Garth. So thank you for that question. We'll get there shortly. Before we get there, who do I approach to invest in Bitcoin? I mean, I think I could get like a Bitcoin ETF on the JSE if I wanted to go that route. Are there other ways I could do it?
I wouldn't do that because that's like kind of trading on crypto. It's not like directly interfacing with crypto. I
Okay.
would get a Bitcoin wallet, and you can go to, like, we have three great exchanges. So exchanges, they acquire the coin, or they are a nice on-ramp from you to convert your South African rands. You can transfer it into them, and then from there you can select from a portfolio of crypto. I would suggest, if you are just getting into it, please stick to Bitcoin, and then as you grow in your own knowledge, expand to what other coins that you feel fit. So Luno, Valor, and Binance are great businesses. So when someone else is holding your wallet, like these exchanges, if your Bitcoin is, or at least your crypto portfolio is sitting on an exchange, they are the custodians of your wallet. And if that company fails, you will lose your money. This happened with I almost said Sam Altman, and that would have been the worst. But there was Friedman. It was
Freedom.
the great crypto scam that happened a couple of years ago. That was where people figured out that you were trading between like two businesses, and that was artificially inflating the price of like the coin that exchange was using, and then the whole exchange fell through, and people lost a lot of money on that. But if you look at businesses like Luno, Valor, and Binance, these are well-built businesses. They comply with all of the regulations that are in here. As far as I know, they are loyal and good custodians of your digital assets. So then you will just transfer money via electronic transfer or a bank transfer into that, and then you can use those funds to then buy your portfolio.
Okay, and then I see we've got a poll running in the chat. Yeah, 45% of viewers say they have been thinking about investing in crypto. 24% had not considered it, but the discussion is opening them up to the idea. 22% said yes, they do, and 10% said nope, they never will. Interesting. We hope to win you over and maybe share some advice that might make you, not advice, share some information that might make you change your viewpoint, and answer your questions. And then let's talk about Parent says cover the lack of regulation versus traditional fiat money. What should give you comfort? I think the FSCA is definitely moving towards bringing crypto into the regulatory sphere, right?
Hmm. Yeah, so that comes back to, so there's many ways you can have like your own wallet. You can buy a mining rig yourself. You can mine Bitcoin yourself, so you can participate in that transaction verification network. You can enter into a pool, and then that will output into like a private wallet that you can then even put it on a USB stick and like store that separately. So in there, there is a lot of regulatory kind of uncertainty because this is not money that sits in a bank and that can be traced across that. But each wallet does have a unique code, and if you use blockchain analysis tools, you can kind of see where the money is moving. And then, like our colleague Yashil, when he was tracking the AfriCrypt stuff, which he did some great pieces so far, he really went deep into chain analysis, just seeing how the money moved. But then it's also important, like for an investigation side, to have knowledge of what the money was used for, or at least what those assets were used for, because you can't track that across the blockchain. So like blockchains are weird because they are so transparent because everybody can see what's happening, who owns what. So like your wallet is literally your ownership of the blockchain, but you can't see what it's being spent on. And that has been traditionally what I've seen a lot of people have fears around. But if you are working through a Binance, a Luna, or Valor, any of the registered exchanges, there are more licenses being issued by the FSCA. FCSA. Always get tripped over by that one. For more things, but those guys, once you have a license, you are bound by a code of conduct, and you are protected to a certain extent. Again, if the company fails that holds your wallet, you lose it. If you lose your wallet in real life, like you misplace the USB or you forget your password, that's done. Then you can't access those
and
things.
Then, speaking of wallets, what's the difference between a hot wallet and a cold wallet?
So hot wallet is like you transacting with it, so it's connected to like the internet, and a cold wallet, like cold storage, is off the internet. So like you have to then reload it like onto the ledger, so the ledger knows that
So
you
like
own
online
it.
and offline.
Yes, exactly that.
Okay, and then Mario says, if I copy my wallet offline, will my Bitcoins not be safe, even if the companies fail?
You would have to transfer it into a private wallet away from the exchange, and then it will be safe even from that exchange. Yeah.
Okay. And then Thomas Hilton, these are clearly people who know their crypto. Thomas Hilton says, can you get your crypto from the hot wallet to your own cold wallet?
Oof, my man, I I am going to say that I have friends who do that and can explain that for me, and I will have them on when we roll out the crypto corner webinars at some stage in the near future. I don't know when. Looking at you, Neesa. So when I get licensed to do those things, but yeah, subscribe to
Will
Crypto
definitely
Corner. I'm
be.
gonna get some of those experts in there as well. Comes out lunchtime every Thursday.
Yeah. Yeah, so this webinar is really just an introductory webinar to introduce Lindsey to the audience so you can get to know him and maybe sign up for his newsletter, get a feel for what it's all about. And there will be regular monthly Crypto Corner webinars knocking off very soon, where Lindsey, sorry, not we, where Lindsey will be diving much deeper into crypto stuff with experts who know more than he and I both do. Joseph wants to know, how do I know that I'm not supporting money laundering by buying Bitcoin? Is that?
If you are not partaking in money laundering, then you are not supporting it.
Yeah, I would think.
Yeah, like I understand the question, because what is money laundering? It's just moving it through another system and then coming out clean on the other side. And that is an awesome way. These exchanges can report, or they can track where the money is coming from. Yeah, getting onto the exchange, but a lot of the guys aren't doing that. They're doing it through their own wallets, and how they then pay for that transaction we will never know. So there is a lot of money laundering happening through the exchange of crypto. So it is what it is. We can't track everything. Yeah, you have to make that ethical call yourself.
And then let's talk about transaction fees and costs. Like if I'm venturing into this area for the first time, what kind of transaction fees and costs am I looking to pay?
Okay, so like that's a very loaded question. There's many parts of that. So there's on-ramping and off-ramping. So when you are transferring, exchanging fiat currency for digital currency. If you're getting your money onto the exchange, Binance, They take a 1.4% on-ramp fee, and that is facilitated through Stitch. Luno provides free South African deposits. And then if you are using an instant EFT, then that gets a fee which is also around 1.4%. A debit card deposit is 3.9%. And then Valor is also debit card 3.9%. Withdrawal fees, that like gets a little bit tricky. So there's some flat fees, like it's kind of all over
Is
the
it
place.
like banking where you have different withdrawal fees depending on the amount you're withdrawing?
Yeah, so there's like a gas fee that you have to pay. That's just kind of when you're pulling your money off of the exchange, and then that goes in again to subsidize like the Bitcoin that then does get created, like in the market. So it's a very I don't think this is the forum for that. I will have a full explainer of that, not this week, but next week's newsletter. This week, we're chatting to Pick and Pay, just talking about how well those transactions has been happening. So that's a pretty good one to look out for. But yes, there are transaction fees, but you have to be cognizant that what you see when you open up like your Luna wallet is not what you're going to get. Like a conservative estimate is like just skim like 3% off of that, just for the exchange fee, and then yeah, that's a good rule of thumb.
Is yours. And then what are the red flags I should look out for if I'm starting to invest in crypto?
Ooh, that's wild. Like I said, if I was just starting, I would stick to Bitcoin because it is the easiest currency to understand. Like there's a whole bunch of stuff. There's Solana, there's Avalanche, there's a whole bunch of coins out there. There's meme coins as well, which people are using kind of like GoFundMe's, which is wild, where they'll just like start a coin and then people buy it knowing that they kind of just donating that money to somebody.
Oh,
Whereas in the past, it would just be a rug pull. So like a Logan Paul, who has done it in the past, will start a coin and type it up, and then everyone will buy it, and he'll trade with his friends to like artificially inflate the price. Pardon me. And then they'll just withdraw everything, and then everybody loses because it just crashes. And there's like a
that's the
cottage
rug
industry
pull.
of yeah.
Okay.
Then there's like a cottage industry of day trading that's kind of arisen around that idea, where these guys are just trading on the rising and falls of these meme coins, which is that's some deep trading stuff. But yeah, I would stick to Bitcoin, and then you're just watching kind of global news. You're watching like when the U.S. Federal Reserve Bank, when they increasing or decreasing their interest prices. You're looking at people fleeing to safe havens. So when there's tariffs or whatever, there's a lot of inflow going into Bitcoin now. So Bitcoin and gold are the two safe investments that are starting to evolve. But yeah.
John Flanagan says his sister had a Bitcoin supply a few years ago, and then they've lost the password. So they've tried many routes to recover the password, and they failed. Is there any way that like they can fix this or recover it? Or if the ownership is transparent, surely somebody out there knows John Flanagan's sister had this is the Bitcoin that belongs to her. No?
You could see, if you have the wallet address, you could see that the Bitcoin belongs to her. But chat, if you lose your password, they can't do anything. Not even like Binance. If you have a Binance wallet, they can't even really help you if you lose your password.
Really? So the password is that vitally important. And is the password literally like the password I would have for my internet email kind of thing? That's what I'm
Yeah,
picturing.
that sort of thing. Yeah.
Okay. Marika's asked for details for your Crypto Corner newsletter. So our colleagues at the back end will drop a link in the chat so you can sign up for Crypto Corner. Patrick Barter says some retailers accept Bitcoin as a means for payment. I think you mentioned that briefly with Pick and Pay. So how does that work?
Yeah. So that's built on a layer two. Okay, so with crypto, there's different layers of the blockchain and your ownership of the blockchain, so your wallet, and then all the mining that the transactions that happen like on that level. That's all layer one, right? So on top of that, for speed and ease of access, there's layer two things, and one of them is called the Lightning Network. So everything that you place on the blockchain gets tokenized. So it gets given a unique identifier, digital identifier, and then that is what gets traded across. So it has its own little address and a couple of metadata that gets attached to that. That's a good way to think about it. I'm super oversimplifying for the crypto pros out there. As a bliff, guys. We need to keep it brave. We need to keep some brevity. And then, so Lightning kind of reads those tokens, creates its own token of value on your account. So when you pay for the bread or milk at Pick and Pay, then it's just like one quick transaction, and then all the other layer one stuff kind of happens in the background afterwards. So it's kind of like tapping to pay, really, where, like Standard Bank customers will know this, like 3 days later, the money will go, you'll get the SMS.
Money goes off, okay.
That's when it was like transacted. So it's kind of like that. So just for that speed of access, Lightning Network facilitates that. So then Pick and Pay started with that, and then they hooked up with another payment provider, and I forget their name right now, and I didn't put it in my notes. I'm so sorry. But yeah, so like now they can accept not only Bitcoin payments, but payments from the Luna wallet, the Valor wallet, and the Binance wallet. And there's another payment service. But yeah, and then that just all kind of, it works on the same platform, but it can work across the different coins. So Binance uses their own coin from the exchange, BNB, and then you can transact in USDC as well, and USDT. So those are stable coins that are tied to the value of the dollar. Because like the biggest pain with those payments is that because the Bitcoin price fluctuates so rapidly, when you picked up the bread and when you're paying for the bread, the price could have like dropped. So to hedge against that, the transaction is done like on a stable coin.
Okay, interesting.
It's wild in the tech world.
Tradition wants to know, how does one ensure that the trading platforms are not pyramid schemes that are simply rolling cash from new joiners to the people that want to cash out? Is there some way, do the platforms confirm their purchase of like the coins? Like, how do I know that they're really buying the cryptocurrency for me?
Okay. So on the exchanges, that they hold the wallet and all the other infrastructure, the payments infrastructure, the on-ramps, the off-ramps, like all of those things that makes it easy for you. They hold all of that. But the transaction that's happening on like your Bitcoin wallet, for instance, that is tied to that account is a legitimate transaction. So what's happening, there are some dodgier players out there who are basically offering a trading platform that they say is backed by crypto. But they kind of playing interference in the middle there, and then that's how people are losing their money. So again, I would say please stick to the reputable, registered exchanges that we have in this country.
Okay, and then I think I'm gonna touch on, let's bring in how your crypto gets taxed. So I don't know if you want to start off talking about the fact that it's taxed differently depending on whether you are viewed as a trader or an investor.
Yeah. So currently, the Reserve Bank, South African Reserve Bank, classifies crypto assets not as legal tender or currency, but as intangible assets or property for tax purposes. So it's like if you're owning gold or something like that, like your exposure to that is kind of mirrored with crypto assets. So normal income tax rules apply to crypto assets, and taxpayers are obliged to declare any gains or losses derived from asset transactions as part of their taxable income for the year that they are received or accrued. Failure to comply can lead to penalties or interest. That's where
Absolutely.
we are. So it's basically like capital gains territory, as far as my knowledge goes.
Yeah.
Um, so then, if you run it that way, then it's a lower tax burden than if you're declaring it like with your income tax. But again, this is not financial advice.
Absolutely not. But I think if I could just add to that, so any crypto disposal, which includes trading one crypto for another type of crypto, is considered a taxable event. So it'll trigger a tax, right? And then depending on the nature of the transaction, it can be either capital gains tax or income tax. And the quick way to look at it is traders or people who are frequently buying and selling crypto for short-term gains, that would qualify as regular income, and that would then they'd pay income tax on that. And the people that are holding crypto for long-term appreciation, like if I had invested when it was 2,500 Rand in 2015 and still had it now, then I would be subject to capital gains tax, which is lower, but it would be 40% of the gain, less your annual exemptions for CGT. So I hope that does address the question that we had earlier. Perrin has another one for you, Lindsey. He says, you mentioned the cost of energy to mine is roughly 50K. Will the evolving cost to mine fundamentally act as a pricing floor in theory? Perrin, this sounds like a very complicated question.
I shouldn't have said 50K.
Okay.
That was my own personal kind of like when the price volatility was happening with the
Like a
Trump tariffs.
hypothetical.
Yeah. So in my mind, I went to sleep at night knowing, or at least lying to myself, saying that it will never fall beyond 50K
Okay.
because that's what it costs to mine. The mining costs have shot up exponentially over the last couple of weeks, driven, of course, by tariffs, rising energy costs, the Russia-Ukraine war, like all the things. There's been some weirdness in the oil price as well, but like we won't touch on that. So like energy is energy, no matter where you go. So that's why these miners like to set up in low cost energy areas. So like Norway or what's the big place with all the volcanoes? That place.
Okay.
Iceland. They have a lot of like geothermal energy and like natural cooling as well for those holes, because these are like massive mining operations. They just have holes and holes of mining rigs that operate best obviously when they are cold. Then there's obviously the advancement of technology as well, because the ASIC miners, these specialized computers that are processing these transactions, or at least trying to solve the cryptographic puzzle that then will unlock the Bitcoin. Yeah, as those things get better, there's depreciation on the assets that these miners have sunken into their operations, so then they have to upgrade. So those are all the kind of factors that are driving that. But fundamentally, Bitcoin is deeply linked to energy, and the cost to create Bitcoin is tied to the cost of electricity. So as it gets harder and you have to spend more, it becomes more valuable per se. And as more people become aware of Bitcoin and more people want Bitcoin, that will also drive the price because it is scarce.
Right. Mario, I don't think this is a question, but I'm going to read it out because I think it's hilarious. He says, you probably know about the guy in Wales whose ex-girlfriend threw away his Bitcoin wallet, which he kept on a hard drive, that is valued at about $760 million. He has been trying to buy the municipal tower for years.
Yeah, that's I'll share a personal anecdote as well. So in a previous job, I hired somebody, and he had, I think at the time he had 3 Bitcoin. And I was like, dude, if you're gonna be working for me, and reporting on crypto, you're gonna have to dispose of your assets, or like give it to your mother or sister or something. And then he sold it, and it was like, this was like 2017.
Oh, shame.
And he's a very good friend of mine, and he has never forgiven me.
Yeah, that sounds about right. Um, so Jenny J has a question that's a bit of a loaded question. She says that on the Hello Peter platform, there are lots of consumer complaints around Luno, Binance, and Valor. I don't think that we are the right platform to answer those concerns, Jenny J, in the sense that if we were talking about shopping for groceries, I wouldn't necessarily be addressing complaints about Pick and Pay on Hello Peter. So I think those are issues that would have to be taken up directly with those platforms.
Hmm.
Yeah,
I'll have Christo from Luno on one of the
there
webinars.
we
Then
go.
you can come ask him,
We'll
because
have people from
check it out.
Binance on as well. Please come, fire away. Summer wants to know, should you invest in single coins or opt for bundles?
Ooh, again, like that goes investor to investor. I say just keep a nice mix in the plat. But I
Simple.
mean, keep it simple. Stick to Bitcoin. Like, of course, it's fractional ownership, but yeah, you can build that portfolio over time. It's not as volatile as some of the other guys. I know Ripple, XRP, they on again, off again with like some court cases in the US. I know the US has moved a lot of legal might away from attacking the crypto industry. So there's been an uptick in those things. You'll see a lot of the NFT guys come back into the space because they can now operate quite freely in the US market, and that has a knock-on effect in the rest of the world because it's a global kind of transactional environment. So yeah, I would stick to Bitcoin, stick to what is best known and what has uh, serious kind of fundamental underpinnings.
Okay. And then we're about halfway through the webinar. Thank you to everybody who's sending through questions and feedback. We're really enjoying the interaction. I think this is definitely more Lindsay's thing than mine. Lindsay wants to know, sorry, Neil wants to know, can he invest directly on his profile or like via an ABSA stockbrokers platform on the JSE?
There you're dealing with exchange traded funds. I don't know how many are on the JSE. I did know this. I was researching it the other day. But yeah, no, I can't give a good answer on that. I'll address it I'll actually file this question, and I'll address it in this week's newsletter. Thanks, Neil.
And the newsletter will come out on Thursday afternoon this week, Neil. So if you sign up today, you'll definitely get your answer. George Hoffman says if he doesn't use cryptocurrency, can he still invest in it? So I assume you mean if you don't use it like a Pick and Pay, can you still invest in it? I would think yes. Yeah.
Oh yes, that's that for me. Like Bitcoin is a long game. I equate it with gold, with those kinds of things where it's an asset that you can hold on to. The market is going to ride whatever it is, but the historic, like we can only comment on like historical data, and the data has shown a consistent growth through all the halving cycles. So you'll have a drop off after a halving event, which we've experienced now, and then like as the market kind of shakes out, all the fly-by-night miners get shaken out as well. Then it continues again. So as the value and investment into the infrastructure increases, so does the price of the commodity. It's like gold. I mean, gold inherently means nothing. Like I can give you a piece of gold now, you can't go buy a loaf of bread with gold. You have to then take it to another appraiser, and even like it's actually something I brought up in the article I wrote the other day, where gold mining, right? Those miners that risk their lives and actually do the mining don't really get paid market value. That's why you have like unions and you have all those conflicts to try and get like fair pay for these people. And if they had to be paid fair value for what they're doing, that would increase the price of gold a lot more because it will be a lot harder to get it out of the ground. Because gold gets used for various other things that it has secondary, like it has many different kind of values built into it. So it's the same thing that's happening with crypto, where not so much with Bitcoin, because Bitcoin is kind of like a singular entity as like a commodity, whereas Ethereum and Solana and some of the other coins, there's other services being built on top of that. So then that's how they kind of derive their own value. So yeah, you can hang on to it and treat it as an asset, but I would say like stick to the main thing if you're going to treat it as a long-term investment.
And then, so there's two things I want to go there. We mentioned, and I was talking about the price, like for one Bitcoin, 2,500 to 3,500 in 2015. Now it's a hell of a lot more. Does that mean I'm now priced out the market? Could I go in and say, like, listen, I've got 1,000 Rand, I want to invest per month in Bitcoin? Or do I have to have like enough money to buy one Bitcoin, which is
No, you can put in like $20 worth of coin right now. Obviously not you and me, because we report on these things and
yeah.
that would be inside of us. But
So
yeah,
you could buy
you can
partial ownership of
yeah.
a Bitcoin with whatever money you have available to invest.
Yeah, yeah. Open up a wallet. I mean, like the guys are like Luno, Binance. They like running like specials on various things, and they always bring out like promotions and stuff. And sometimes, yeah, you can get in quite cheaply. Then like buy into like BNB, which is Binance's coin, or like in a I don't know what's happening with the stablecoin market right now, to be honest.
Okay.
there's, there's a lot of things happening there as the dollar's valuation is also fluctuating. But yeah, you can buy fractional. You can set like a stop account and just do like 1,000 Rand every month, just going into your Luna wallet or whatever. I have family members who do that and just build that portfolio nice and consistently over time.
And then you mentioned it just now, talking about holding on for long-term gain, and that made me think, since you started writing for us on crypto, and I've been looking through your articles and learning a lot, there are a lot of crypto terms that are like very industry specific or like terminology. Would you like to explain for those of us who don't know what HODL means?
So it's hold on for dear life. So when like so a lot of crypto is governed by fear and greed. So there's a fear and greed index. There's the fear, uncertainty, and doubt FUD. So when the fear is high, it means that a lot of people are taking money off the exchanges. They're going to other assets to put their money. They're just running away from crypto because, I don't know, some fake billionaire decided to run a rug pull, or like something happens and it spooks the market and everyone runs away. So like then you buy the dip as the market dips. And
Okay.
then when the price goes up, especially on the meme coins, when it's on a very strong rally, it goes to the moon. Unfortunately, our prodigal son, Elon Musk, was big on that with Dogecoin back in the day. It was all about taking it to the moon. So yeah, those are all the fun little things. And then there's another one that I saw actually come up on a less than kind comment to one of my crypto articles on the website, and the response to him was HFSP, which is have fun staying poor. So that's something that the crypto guys will
Oh,
just say to somebody who really doesn't understand the value within the market.
okay. And the fear and greed index, that's something that basically I can use as a gauge to tell whether the market is selling or. buying more crypto at any
Yeah.
particular point in time. And that's actually something you will see. There's a regular feature in Lindsey's newsletter where he has the fear greed index for that week represented in a nice little infographic. Okay. Patrick Crow says it's a very interesting discussion. Tempted to try. I'm right there with you, but Lindsey says I'm unethical if I do, so apparently I can't. Um, Mario, we're not really going to speculate on the costs of or where the Bitcoin price might go. So I don't think we're going to address that one. And then Inkazi Mulu says, I hear of get rich quick bros talking about crypto. What's my best source for info? It's Daily Maverick and Lindsay's Crypto Corner newsletter.
Crypto
So
Corner newsletter, man.
if I was to invest 30 Rand in crypto, like Bitcoin, what kind of return can I expect?
If you had to invest 30 Rand,
Let's say 50 Rand.
50 Rand last week, Monday, when it was still down at like 75. I use the dollar just because the numbers are smaller. It was like 140 odd thousand Rand for Bit. And then it jumped to like 94. It turned at 97 into Saturday. Yeah, you can do the maths. That would have been a nice 20-30% return there. But yeah, you'll get those cycles, and then as you obviously add to that investment, as you grow your portfolio with your own deposits and stuff, and keep taking in all those interests, then yeah, it can go quite far.
Okay.
But again, this is not financial advice. Please.
This is definitely not financial advice. So some of the webinars we've got, do you want to talk to us or talk to the audience, Lindsey? We've got like 10 to 15 minutes left about some of the topics you're going to be addressing in the upcoming crypto webinars, where we're actually going to have the FSCA as a guest.
Yeah. Yeah. So at the moment, we've kind of penciled in 3 Crypto Corner webinars, or decrypting crypto, as it would be called there. And we're looking at just like kind of the basics of getting onto a wallet, like what is a wallet, like how do you invest in crypto, how do you move your money on and off chain, those kinds of things. And then we got Stephen Boyke Sidley as well. He's an author, and he's a lecturer at UJ, yeah, and he's a columnist on Daily Maverick.
Yes.
Just talking about the idea of like crypto as ownership, and then I want to, and I know I'm gonna land this plane, but I don't know what the Daily Maverick market is like. But yeah, we're gonna have one for the traders, just one for the established like kind of novice crypto bros, just like more advanced kind of market tracking. And these are people who are far smarter than I am. I'm just a lowly journalist who likes to decode all these kind of technical things. Like I come from a very technical background. I love technology. I love new things that can improve lives. And there's a lot of ways that crypto has made, especially remittances, easier. And like in the Ukraine war, where there were refugees coming out there, they converted their money to crypto and then could then exit that. Like it's a very fascinating technology and utility at the moment that does come with, because it's so new, it comes with a lot of risks. And I am committed to kind of telling a balanced narrative around it so that people can make the best decisions possible.
Perfect. And then Nick Bird says, what percentage of Bitcoins are in circulation now compared to the maximum capped limit you mentioned? So given that we've just gone through a halving, I assume we're not near that maximum cap currently. I think that's
No.
what he's
Like
asking.
I think we will reach 21 million in like 2086 or something like that. So when we'll be long gone by that time.
Oh,
We've had four halving events right now. I did have this somewhere. It's just disappeared from my notes right now. But yeah, I will definitely get back to you on that. We might have a little. Can I tell them that there might be a Bitcoin tracker arriving on Daily Mavericks? I didn't say that. If it doesn't happen, don't blame me, please.
we're looking into bringing a Bitcoin tracker, a price tracker to the Daily Maverick website. So that's in the works. I'm not sure when it will happen. Um, and then, yeah, I think we've touched on a lot of the talking points we had outlined when we went into this webinar. So if there's any questions that you feel we haven't, Dion Kitching asked about the EC10. He says it's a curated bundle comprising the top 10 cryptocurrencies by market cap. That sounds like the JSE top 40, but like for crypto.
Yeah. Yeah, I wouldn't mess with those right now because those are other or at least other vehicles that are built on top of the underlying crypto. Um, I just deal straight up with what the technology is, how to interface with the technology. So that would definitely be Neesa's like ballpark, and she needs to school herself up very quickly on all these new financial vehicles that are coming out.
Indeed. Ross has a question that I actually am curious about. Maybe I'll address it in another personal finance column down the line. But she says this raises all sorts of questions about inheritances, which is actually, so you think about leaving your money to your children, and you now have to think about leaving your digital passwords
Yeah.
to your family. And so I assume you would have to leave your password, your crypto password.
Yes, yes, your wallet details, your wallet password, all those things.
So does that
Um,
mean whoever has access to the password effectively has access to the money or owns the money or is viewed as is there some kind of legal document to transfer ownership, or is it just here's my password?
I will have to speak to the powers that be that govern these things. I have
Okay.
not looked into this yet. Yeah, thank you. I appreciate that question. That has made me curious.
Okay. And then John Flanagan says there's a crypto called, I'm assuming it's VOW, VOW, or CAPS. Have you heard of it? It's intentionally trying to work to replace fiat currency. Are you aware of it, Lindsey? And what are your thoughts?
No, I don't really mess with the altcoins right now. We just trying to like build the knowledge base here, but we'll address the altcoins. Don't you worry.
Okay. And then I think let's go out with a bang. We've got like 2 minutes left. Shall we touch on the fact that the US President Donald Trump is like seriously pro crypto and trying to build it into a US strategic reserve? Does that bode well for the crypto market?
Yeah, but like just the way that he's doing it is weird because um, there is a decree that the like like they can't really buy crypto. So how they trying to do it is with like reorganizing the price of their gold because the gold price is still capped at like what they decided in like the 70s.
Okay.
um, so if they readjust that and then the interest on that, they can then buy crypto up. So it's a lot of like it's very creative accounting and it's wild. So then they will sit on a crypto on a reserve, strategic reserve, but their stablecoin play is actually quite interesting, where they are again going to get a portfolio of stablecoins that are pegged to the dollar to kind of prop up the price of the dollar, which is the serpent eating its own tail, which is also interesting. We dove into it in
In your
the
article.
article I wrote. Yeah,
Yeah.
I think
I
it went
think
up yesterday on Daily Maverick. If you go there now, it should be there. It will explain those things into a lot more detail, and I give some background and just an insight into the creative accounting that's happening there. But yeah, I'm gonna say I'm quite against the government's controlling massive portfolios of crypto because Bitcoin exists as a decentralized currency because you need to control more than 50% of the mining power to then make changes to the blockchain that everybody doesn't agree on. So if there are these companies that are owning so much of the underlying blockchain, institutions, governments, it kind of defeats the founding principles that all of this was built on. So yeah, that's my position personally. I'm not in favor of it, but yeah, we'll see what the future holds.
Okay, so I think with a few minutes left to go, and I don't see any more questions coming through. Everybody's saying thank you very much, Lindsey. Summer said thank you, informative session. Looking forward to more of these discussions. Try getting the guys from Luno and Valor to chat to us. For sure, Summer. So
Definitely
this
will.
was
They will be on.
this was
They
just
have
the
committed.
introductory one. I am going to bow out from the crypto webinars from here on out. Lindsey is going to be your host, and he will be hosting people from platforms like Luno, Binance, Valor, and the FSCA, we will be inviting regularly, so you have a regulatory voice in the room. So yeah, please definitely sign up for his Crypto Corner newsletter. And thank you again to ABSA for sponsoring this webinar and making it possible. And I think we're going to sign off there. Thanks, Lindsey.
Thank you very much. And thank you for opening up this opportunity for people to learn about the wonderful things that technology can bring.